The discussion today is about remittances and how it's different from cross-border payments and what does the future look like for that industry. So will you kick it off, Matt?
Sure. Hey, everybody. I'm Matt Oppenheimer, co-founder and CEO of Remitly, and we are transforming the lives of immigrants and their families by providing the most trusted financial services on the planet.
Hi, Michael Kent. I'm the founder and chairman of Azimo. We're a cross-border payments platform based out of Europe, so serving European customers to a couple of hundred markets around the world.
Thanks, Mike. Hey, guys. My name is Nanu. I'm co-founder CEO of Nium. We have a consumer remittance brand, which is Instrum, which is accessible in about 40 markets.
So let's start off with a really easy question. Why is remittances different from cross-border payments? Prajit, will you take that on?
I think when you hear the word remittances, you automatically think it's a migrant who's sending money back to put the food on the table. That's a very different set of business. Like, for example, today less than 10% of our transactions are sub 500. Our average ticket sizes tend to be like about US dollar 2,000. So that's the way we kind of differentiate between saying sub 500 are remittances, people sending money back to put food on the table, and anything over than that is more about cross-border payments, where you're catering to a completely different strata of the society.
Thanks. I think, Mike, you disagree in some points on that?
Well, I just don't really like the word remittances because I think it's kind of loaded, and I don't like the characterization of our industry as, you know, serving subprime or blue-collar workers. And I really rail against the categorization of our customers like that, because actually some of our best customers are, you know, earning a lot of money and sending money across border, you know, huge in big chunks. They're still remittances, but I just don't really like the characterization or the use of that word. They're all payments. What makes them really important is that mostly they're going to family and friends for, you know, essential stuff, family support, education, healthcare. So they're important payments, but they're payments nonetheless. And if you characterize them as remittances, they end up getting treated differently, thought about differently by the banks, but they're not. They're just really important payments.
Thanks, Matt. And what do you see it as? You have more investment banker clients, or you have more guest worker clients?
I think it's more the latter. I think that when you look at the 600 plus billion of remittances that are sent, if you kind of segment that out, about 200 billion of that, based on what we've seen, I'd love to hear your guys' thoughts, goes from kind of developed to developed countries, and that's, you know, tends to be, the biggest difference I think is twofold. One, it goes to bank accounts only, as opposed to cash pickup, as opposed to mobile wallets, as opposed to a wide range of disbursement options, which is where the other 400 billion goes. And the second difference with that 400 billion is that it tends to, the money needs to be there faster oftentimes, and so customers really prioritize a service that will get them money the way they want it and instantly whenever possible. And I think that those are the customers that we serve, which is less the kind of investment banker example that you mentioned.
And the really interesting stat I heard was the guys at the World Bank were saying actually that $600 billion number is probably a massive underestimate, because that's just the formal remittances flows. It might be 2 or 3 times as much going informally cross-border, and, you know, things like Hawala, completely unregulated. And I think the super exciting thing for our industry is that informal flow exists because it's expensive and time-consuming to send money. What the three of us are doing are making it incredibly cheap, incredibly fast, incredibly convenient. And if you do that, what you see is you can formalize the informal sector, and actually the market will grow. I think this is kind of like an Uber-style play whereby, you know, they actually grew the transportation market dramatically by, you know, just giving people a solution that they otherwise wouldn't have.
So it's interesting. So the way you're describing it, in a way, remittances is almost...
Stop using remote payments.
Remote payments.
Important cross-border payments.
Okay, let's use that. Remote payments. Your industry seems to be very much predicated on the connecting the banked to the unbanked. Is that, or the underbanked rather than the unbanked? Is that a fact, or is that a way of characterizing it?
You know, just to take that, if you look at our customer set, we don't do cash. People are sending money not only for, sending money for like monthly mortgage, etc., but even investments, right? So we would have customers sending like 300 grand, 400 grand on our platform. So those are not the guys who are, again, sending money home so that their kids can go to school, etc. So it's a very different customer segment altogether.
So would it be correct to say, therefore, you're not replacing existing flows, you're improving on existing flows? So you're making it more effective, cost-effective, time-effective, secure, even possibly. Is that correct?
Yeah, I think the main thing is just extending, customer choice. So, in certain parts of the world, cash is still absolutely king. Sending money to the Philippines, but a lot of people need to pick that money up in cash because they're unbanked. But we also send, instantly to bank accounts in that market. We also send to some of the mobile wallet infrastructure that's rapidly being built, particularly by the Chinese. Matt's just signed a deal with Alipay to, terminate into those billion wallets or something. I'm selling your business here, but it's just offering consumer choice and fantastic service is what we're trying to do, banked or unbanked.
So so what's interesting about what you're saying? You're just slightly better than what's there. Is that what this is?
I think it's significantly better. Yeah, so sorry.
Matt, maybe you want to take that one.
Well, I think first and foremost, it's important to recognize that most money is still sent offline on the origination side. Most money, somebody walks into a physical cash location, gives that agent cash, I call it a Western Union, and then it's delivered in cash or the wide range of disbursement options that we talked about. On the origination side, that is rapidly shifting digital via providers like us, which I'd say is transformationally better. Amongst the digital providers, compared to some of the legacy players, I think there's a level of taking out costs and affordability, but also reliability. Sending money sounds very easy. Sounds maybe not to this group because it's a bunch of fintech experts, but sending money is actually exceptionally complicated when you start to get into the compliance, the fraud prevention, the disbursement partners of which are not always reliable, the security, all those aspects. And so if you go and look at review sites of money transmitters, including some of the legacy players' online digital platforms, there's a lot of negative reviews, not because they don't like their customers, because they put their good customers through a lot of pain because their systems aren't reliable. So I think it's transformationally better, not only because it's shifting from offline to online, but also the fact that by making it much more reliable and affordable, it provides a huge amount of benefit to a customer that otherwise has to, when they click send, say, that $300 of my hard-earned money may just get stuck in the ether for days or weeks, and that is exceptionally painful for our customers.
Yeah, and in December, I think this is the same for everyone, but in December, a third of our customers came in through referral. And so they were invited by other users, and that doesn't happen if it's ever so marginally slightly better. You look at the NPS scores of the digital guys versus the legacy guys, and they are 3x higher. So it's payments, cross-border payments are an important thing, and they're a big part of people's financial lives, and it's much, much better, I would argue.
So Michael, you don't like the word remittances, but from the way you describe,
I'll let you off.
You guys describe yourself. You just seems like there's a. I'm sure you may have heard of this company. There's a company called TransferWise in the UK, who's one of the unicorns in the country. That was an ironic comment. Aren't you just a different type of TransferWise then?
If you go back to the two segments that I were talking about, TransferWise is really helping expats or folks who are buying a house in Spain and live in the UK or traveling. It's not the kind of recurring payments that needs to be picked up in cash instantly. And so that's how those two markets kind of segment. But I think there is a parallel that just like banked customers and expats that were sick of paying high fees and having an unreliable system and going to TransferWise, people that have been going to a physical cash agent or a non-reliable legacy player that has a digital platform are similarly shifting to providers like ours.
So you're filling a really desperately important need in the market. What are some of the challenges you're facing, Michael? What are the things that bother you right now?
So I think getting cybersecurity right, getting regulation, which is constantly changing in both directions, that is tough. I think particularly in the European Union, we're facing some, we've had some challenges about where we base our business and how we get regulated. So we opened up an office in the Netherlands and Amsterdam, and we're running all of our European transactions through that. I think TravelX is an interesting case study in what not to do if you lose legacy software and you end up getting hacked. So I think that's focused the minds of both the regulators and anyone building software in this sector. But yeah, I'd say regulation and making sure that the money is completely safe are the big ones that anyone who's in regulated financial services has to think about.
So cybersecurity, I think, is something that every business in the industry and fintech in general is worried about. Regulation is actually another one, and by nature in your organizations, you're looking for regulation from the sending side and the receiving side, I guess. So you have to deal with both of those. Are you seeing regulation understanding what you're doing better, or are you seeing them becoming more rigid because of all the challenges that are coming through? Pajit, what do you think?
So I think over the last 5-6 years, in fact, regulators have opened up for players like us, right? So if, we started in actually very complex and tough markets, unlike a Remitly or Azimo. We started in, say, Singapore, Malaysia, etc. There was nothing called eKYC. You had to actually visit someone or send someone like a person who would go and actually physically verify him. And from there, we've actually made headway with regulators saying that this is how eKYC we're doing in Australia, in Europe, and then basically gradually get them on board. And these are, we've seen a big change in regulatory, more on the positive side, not on the negative side. I think that's a very strong part where regulators believe we are adding difference. So for example, when we got a license in Malaysia, one of the reasons they gave us is digital remittances was 4% of the total remittances. And they said, by giving you a license, we want to promote the fact that at least by 2020, it becomes about 12 to 13% when we got it about 2 years back. And we've made a big move from 4 to 7-8% now. And I think that's a big thing which is happening from a regulatory perspective, where they're opened up to players like us. Like 10 years back, if 3 of us had gone and met a regulator, they would have thrown us out. I think that change is very, in fact, I don't think regulation is a challenge. It's a day-to-day part of our business. We have to manage it as part of what we do. But it's getting better and better, where people are really open to listen to suggestions and views.
So you're seeing regulation as a nuisance. In my past...
No, it's not true. We love tough regulators. I mean, at Azimo at least. We want them to regulate. We want them to be, you know, hard, firm, but fair. And there's a reason we chose, you know, the Netherlands to get our European license, was because it's you know, they're super strict. You know, some of the other European jurisdictions, you know, some of those islands in the Mediterranean, they're not quite as, you know, as strict on this stuff. And it's very much faster, very much easier to get a license there. But no, we like a strict regulator, but one that we can talk to, one that's educated, one that understands the sector. So we're not afraid of regulation.
So for the public, Azimo is a blue chip company that is strongly regulated. Just be aware of that. Now, in my previous life, I was the head of digital payments in a big bank. And one of the big challenges, we wanted to develop remittances, and we walked away because of regulation. And we walked away about the complexity of that would be coming in. So regulation can be your friend, but it can also potentially be your foe. Do you agree with the other panelists, Matt, on this?
Yeah, I agree. I think that there are some payments companies, crypto, early days, that can kind of say, hey, how do we, or, you know, question if they need to be regulated. I think more clarity's come in that space over the years. But in the business we're in, like, I don't know, when you started it, there was no question we were a money transmitter. And so we leaned into regulation and tried to say, how do we establish the right trusted relationship with regulators? Because that's the only way to operate as a money transmitter. I mean, it's different than also like ride sharing or things where they could skirt the rules and try to somehow then survive and ultimately thrive. Money transmission, I mean, we are preventing drug trafficking, terrorist financing, really serious things. And so being highly regulated is a super important part of our business.
So it's interesting that I'm delighted, and I think we're all delighted here that you're very compliant and aligned with regulators. The reason we walked away in my previous role from this is very much the issues associated with KYC, but also more importantly with AML and the fact that we could regulate where the money was going to. I assume that is something that keeps you up at night also, that last mile discussion of who is actually getting the money. What advice do you have to companies looking at that, and what are some of the challenges that you think you're seeing in that last mile thing? If you're doing bank-to-bank transfers, usually you can assume that the corresponding bank is compliant. When you're doing different channels, usually. When you're doing different channels, you may be a bit more uncomfortable. So how do you get around that, Michael?
Well, so it's actually not enough to rely on the regulated status of your counterparties. So every regulator that I've ever talked to assumes that you have to be, you know, fully cognizant of everything that's happening in the chain. You can't offset your regulatory compliance requirements to a third party. cash is actually, the people we partner with generally who are paying out cash have been doing this for a long time. It's a core part of their business, and they have very tight security about matching people's identification to the transaction numbers and making sure that the money goes to the right people. We scan every single sender, every single beneficiary, every time they send in real time using some AI technology, actually Comply Advantage, which is a great business if they're in the room. And yeah, we actually have to do that, and that you can't say that. And actually, I think in many cases, in certain markets, sending money to cash is no more risky than sending money to a bank account. You'd be surprised at the level of compliance in different parts of the world. And we send money to tricky parts of the world. These are not necessarily on top of anyone's holiday destination list. We're big to Nigeria, big to the Philippines, big to Colombia, and these are places where there is inherent risk. I think it's great that banks walk away from it because it provides an enormous opportunity for us.
I wish you were with me when we were having conversation with our risk guys, but that's good to know. Project, what do you think? Is that?
I think the view on cash has changed significantly, right? So, going back to your example where your bank struggled to actually build a platform, we actually power.
Do you do cash?
We don't, but
you don't do.
What we do reverse is, if you look at a bank today, we power about 15 banks where we opened our payments infrastructure for banks to use. Today, banks are reaching out to us saying that, can you do cash outs for me as well? Like, this is something which I would have never heard ever, right? And I get shocked. So, and they not only want us to do cash out, I will be sitting in meetings saying that, hey, we've got some large e-commerce merchants, and some of the markets we are present, like Philippines or Indonesia or Malaysia, etc. They are the penetration of credit card is pretty less. So how do you get someone to watch Netflix or get money from Uber? So they're saying, hey, can you also help us do cash in? Now this is a bank, a large bank, talking about this. So this really clears in my mindset that cash is no more like a 4-letter word. It is a 4-letter word, but it's not a 4-letter word in that sense, that there is so negativity. I think when 3 of us would have started like years back, cash had a lot of negative connotation to it, right? That has changed significantly.
So, Matt, do you agree? Is cash a 4-letter word?
I don't think cash is a 4-letter word. I do think that I can think of a bunch of examples where banks have been used for money laundering and terrorist financing and other things, and I think that that's similar with cash. So I agree with what Michael said.
HSBC.
Yeah, exactly.
They've all been at it.
Yeah, and so
HSBC's case, they had there's a couple of good shows on it. They had lorry loads of money that they were driving into the branches from the cartels. It's quite incredible.
Yeah,
From the cartels?
Yeah. And they got away with it. Well, they got a $2 billion fine, but nobody went to jail.
yeah.
I like your definition of got away. Okay.
There's a Netflix documentary that's really good on that one specifically. So I think that you got to have the controls in place anytime you're transferring money, whether it's large dollar volume or cash pickup that's going to be a small few $100 transaction. The MOs will be different and the risks will be different, but it's important in all of it. So I don't think cash is a 4-letter word.
So going back into the digital world, I assume that one of the challenges that you have is interoperability between systems. So how do you connect them? So in Europe, we're having problems in connecting bank A to bank B, et cetera, et cetera. I assume your problems are even much, much greater in connecting bank A in country A and bank B in country B. So is interoperability something that is a concern for you guys, and how do you deal with it?
Just to pick that up, only in the US, and we've got like operations in so many different countries, only in the US is, in fact, funnily, the only place where we see fraud is in the US. And that's mostly on the ACH. It takes like 2 to 3 days for the money to clear into your account. After you've processed a payment, after 6 days later, it could be possible someone comes and says that, hey, that money was misused from my bank account. So I think US systems are still broken. Hopefully they move to real-time payments soon, so they experience what we can do. Like, for example, our UK experience, or to a large extent European or Singapore experiences, you do an account collection where you give them a bank account and you push the money, and instantly you can send the money. So, all of us can send money out in like 30 seconds. In the US, unless it's a regular customer whom you know extremely well, you know exactly what's happening, you're never able to provide that experience. So it's market level, but I think US is one, which is the biggest market, is the most painful one.
So Matt, the US is the biggest problem. What do you think?
I mean, the U.S. is unique for money transmitters in a couple ways. One is ACH. It's an old, antiquated system. I think it'll speed up eventually, but there's credit risk in addition to fraud risk. You have to get a license in every state in the U.S., which is hard. And then you're regulated by all 50 states with exams and other things. So it is complex as a money transmitter. Other ways outside of money transmission, broader fintech, like interchange still exists there, so there's a business model for neobanks. But within money transmission, I think the U.S. is a pretty tough market for those two reasons.
Interoperability, Mike, what do you think? Is that an issue for you? Is it really easygoing?
You know, it's hard, and if it wasn't hard, everyone would be doing it, and it wouldn't be worth doing. So, you know, the opportunity is in the fact that, yeah, in many cases, particularly in, you know, some of the more esoteric markets, but actually, yeah, places like the US as well, we're building into core banking platforms or systems that are 20, 30, 40 years old. So it's not easy, and we have to, you know, we have to push our teams out to those parts of the world, and they have to sit there, and the documentation is rubbish, and, you know, it just doesn't really, you know, to get decent, very low cost, very fast transactions requires quite a lot of work on our side, because you could wait for a long time for those banks and financial institutions to build a beautiful API that you can connect into. You know, that's 20 years away in some cases. So I think, but we make it interoperable. We do the work, and therefore we make it seamlessly fast and, you know, exceptionally low cost. But that's an opportunity. You know, the fact that you know, Swift is so slow, and even with all the changes that they're talking about, it's still going to be very, very slow and very, very high cost for anything other than very large transactions. Is the opportunity for us, basically.
So in a way, you're creating alternative networks to the existing payment networks that exist. That would seem that there are some other payment networks out there that potentially are struggle in competing with you guys. So one of them potentially are the card schemes. Do you see them as your friends, or do you see them as foe? Matt, what do you think?
I can start. I see them more as friends. I think that you know, we have a relationship with Visa where you can send to Visa cards around the globe as a disbursement option. Now, that doesn't solve the cash issue, which most of our customers do want as an option, but I think that I see them much more on the receive side in the example I just mentioned. And then when we're processing a payment, processing debit cards is a key way that we actually collect funds. And so Visa's a partner, or MasterCard's a partner on both ends.
Yeah, I mean,
Would you agree with that?
Yeah, I think it's exceptionally exciting that they're, you know, you won't see MasterCard, they still call MasterCard, but you don't see the word anymore. And there's a reason for that. You know, they don't think of themselves as a card company anymore. I think it's exceptionally exciting that they're getting into what they call push payments, what we would call, you know, important small value bank-to-bank payments or cash payments. I think that's, you know, Visa bought Earthport, MasterCard bought Transfast. I think, you know, PayPal obviously bought Zoom a few years ago. You know, these big networks are getting into the sector, and they recognize that what we are doing is exceptionally important. They recognize that emerging markets are where they're going to get their next billion customers, which is important to them. So, you know, it's, yeah, there's exciting friends, I would think.
Would you agree with that, Pradjit?
Yeah, I basically agree. Primarily, the schemes also solve some gaps in our products. So, for example, say a market like Thailand or Vietnam or Malaysia, there is no instant capability, right? So, a scheme today, Visa Direct, if you plug into it, I'm sounding like a brand ambassador of Visa here, is that it gives us a capability of someone sending money into Malaysia, which instead of being T or T+1, it can be instant. So, I think that's a big value add. On the corporate side, you can increase the value to about $50,000 US. These are good things, but these are, you know, we see very few payments going on a day-to-day basis, because like you met me for the first time, and if I ask you your bank account number, you'll give me. But if I'll ask you a 16-digit card number, you'll say piss off, right? So that's, it's not an easy thing for you to collect. So we're trying to see how we can make it more, you know, a simplified process, but it's not that easy to move to a scheme because no one wants to give their card numbers out.
It's interesting that you were seeing this interest and this friendly relationship with the card scheme, because in a way it's admitting that there's a better solution to what they currently have out there, and it's in the form of you guys. So That means that it's admitting that what they have done is not as good as what is required for the market right now.
They're pretty good businesses, aren't they? If you look
They're
at the
fantastic
valuations
businesses.
they trade at, and but they always have to be extending their reach. I think the interesting thing in this market is where does the market end up in 5 or 10 years' time? Are we going to be sitting here with 3 independent unicorns, or will the market have changed? Will it have consolidated? Will there be big players? Will the tech companies be in? And if they are, in what way, shape, or form? I think the networks are probably a likely consolidator of choice for some of the businesses out there.
Yeah. We talked about, obviously, the big financial players right now, and the schemes are one of them. What are your thoughts about big tech and big tech coming into your space, especially on other types of currencies, so like crypto? We've seen Libra coming in and clearly stating that remittances is one of the objectives of Libra. What do you see the role of big tech in this, Matt?
Yeah, I think it breaks out. If you look at the 4 tech companies, it's hard to combine them because I think that there's varying degrees for how they think about something like remittances. I think the most relevant, to your point, of the big 4, Apple, Google, Amazon, and Facebook, is Facebook. And I think that it's crypto's had highs, lows. When we were raising our Series A 5+ years ago, I remember going down to the Valley and everybody was like, "You guys are toast. Bitcoin's going to be a default global currency, and good luck." And almost every investor said that. Obviously, things have evolved there, but I think there is something to large companies with the resources putting towards Libra, the association, and Calibra that I think is pretty interesting. Now, whether or not they can get through the regulatory hurdles, the trust barriers with customers, I think is a huge question. But I think of the 4, that's the most interesting to watch right now.
So from my perspective, all the big 4 hate to be regulated, right? And regulatory, we basically, that's what we, eat, drink, and sleep, right? That's a core part of a business, as I said. All these 4 struggle with regulations. And remember, tomorrow they get fined, they will be fined on their total revenue. So like what's happening in Australia with Westpac, right? So Westpac is going to be fined like a massive amount. That number is not out yet, but it will be in few $billion and it will be a percentage of the net revenue. So I doubt the big 4 want to be a percentage of revenue for something which they could have not created or which is very difficult to build anyways.
That's true. They probably don't think of it as an additional revenue stream, but there's other things that you bring, which is data, customer relationship, engagement, and so on and so forth, that they may value that. And therefore, potentially, they could see a situation where giving away remittances for free could be an option because in exchange of the data. What do you think of that, Michael?
It's fantastic, isn't it? I mean, yeah, it's what other industry could you be in where, the most valuable companies in the world are circling around your industry saying they want to build, billion user businesses in the space? I mean, it's fantastic. And I think Facebook, knowing some of the characters there, they are absolutely relentless and they won't give up on this anytime soon. I think they will probably find that they need to partner in a way that they're not used to doing. And I think they'll have to be regulated in a way that they don't necessarily like. But yeah, I mean, that's happening. I think they also understand that, again, Mark wants another billion customers on his platform, and you're not going to get that from sharing cat videos. You've got to embed yourself more deeply in people's lives, and payments is obviously a great way to do that in emerging markets. And I think there's already good examples with Tez or the WhatsApp offering in India in emerging markets. They're getting some decent traction. It's super interesting.
So just to add,
we would actually love to plug into what it is that they're building in each of those markets. They're not the easiest people to deal with. But that's coming.
I wonder what the record company
just
said.
To add to that, Facebook or in India, WhatsApp never took off because they were asked to comply with the local regulations and they shit the bed. And basically, it's been a year or so. It's not gone live yet.
Okay,
so
one of the big value adds you would bring to the big tech is the fact that you deal with the local issues that work with local regulations. So, interestingly, that means that also that you have to be quite aware of the cultural requirements in different countries. So, that's going to be. Also means that you're subject to what they do locally. So we were talking about Paytm and how the Indian government, for example, is creating barriers. We know the Chinese market is the Chinese regulator is very keen on making sure that they own all the flows of cash and so on and so forth. How do you think about that? Because you portray an image of you being above everything, but in reality you're way inside everything. Regulation, culture, and so on and so forth. Isn't that the case, Mike?
I mean, I'm not entirely sure I understand the question, but
How do you make sure that you are still able to deliver your service in dealing with these complexities that are coming your way all the time? Because what you're offering to the big tech and so on and the schemes is the ability to be delivering this consistent and reliable service forever, which is not necessarily the case.
I mean, building great software is super hard. You have to have people on the ground who really understand how people use it, and then you iterate, and that's how you win.
Okay. So I'd like to ask one last question before you go, and just a very short answer. Remittance is a big deal. What's your advice to people entering that market in the space in remittances? And would you advise as a sector to go in, or do you think it's overcrowded?
So anyone who's coming in now, I think it's a very crowded market. There are enough of us, and we provide the same amount of service. What you'll do is basically drop price and try to acquire customers. I think it's better for you to build a product which kind of looks at other needs of the migrant and basically have remittance as a part of it. So we look at a future of payments, at least the way we look at it is that remittance will get embedded in some part of your day-to-day app, right? It's not going to be a standalone app.
So you're saying don't get into the sector.
Like what you're saying.
I mean, I think a lot of the capital has been deployed into our particular area, whether we call it cross-border payments or remittances. But you know, my advice to entrepreneurs is always, quit that fat job in banking or management consultancy and get out there and start doing it now, because there'll never be a better time.
Matt?
I agree with Michael and Brajit, and I would only add that it's not for the faint of heart, and operational excellence, execution, iteration, all the things that matter all that much more in a complex industry like international payments.
Thank you very much. Please join me in thanking the panel.
Thank you very much.